So, it's been another 2 weeks, and this time around, I did in fact get 5 more shares of Kroger, and then another 5 shares of Kroger. But in addition to that, I did 15 shares of SCHD, as well as 1 share of Cows ETF. It's like cash flow positive, something like that. So not all the companies pay a dividend, but all the companies are having positive EPS and stuff like that. They're cash flow positive. Now this one is a little bit of a less known ETF, and it doesn't just buy and sell. The market spread is bigger. There's not as much liquidity. So that's another reason I only did 1 share. It's about $40 a share. But the bid-ask spread was like something crazy, like $4 or $5. So I'm just not gonna do that. I like the idea of it, but it's not something I'm gonna put a lot of money in if it's not able to be liquidated easily and it's not able to be bought easily. I mean, it wasn't that big of a deal. I put a limit order in for like $40 a share, and it completed, I think, that day or the next day, but I just don't feel great about potentially overpaying or selling for less when that time comes, just because. Another thing, the whole Neos funds are under a different management, so I don't know how that's going to work out exactly with the IWMI and things like that, but I guess it's going to be basically the same. I don't know. And then other than that, Wendy's, of course, broke up over $9 a share and seems to be holding pretty steady at the current moment at like $9.05, stuff like that. So who knows, it might head back up to $10. I'm glad I bought that 55-ish more shares to get my cost basis down another 50 cents. So I'm still a long way off from being positive on Wendy's, but instead of being down 50%, I'm down more like 30% now. It feels a lot better, and that's without taking the dividends into account. So I'm probably closer to down 25%, maybe even 20%. But who knows, if it does creep back up into that 11.50-ish range, I should be my break even, including the dividends. So, I mean, that'd be kind of cool if this story turned around for me and I'm finally at a net positive on Wendy's. And if they get bought out and I only lose a couple $100 all said and done, I mean, that's pretty great. It'd be really cool if I made a profit, but even if it's just the time lost that I could have been making money if I would have just bought a bond, oh well, that happens. That'd be pretty cool if it just break even. Speaking of bonds and such, the 20-year I think is over 5.1% now, maybe even 5.2 now that bonds are going crazy, and now the U.S. government is buying back their bonds to try and keep the interest rate down, and just a whole bunch of crazy stuff's happening as Japan's selling off the American bonds. So, I don't know, I feel like we're in turbulent times, but when are we not in turbulent times? So, I don't know, if bonds creep up to 6%, 6.5%, I mean, that's pretty attractive. I think at 5%, it's pretty good. But that's coming from me, who all of my adult life, I think, I think bonds have been around like 2% or less. Pretty much all of it. As far as my investing life goes, it was like around 1.5% when I started investing. So there was just nothing other than I bonds, which still pretty firm believer in the I bonds. They're not great right now, but I don't know, you could be doing a lot worse. At least at the time that I bought them. However, stocks are probably going to win the day if you have more than like 5 or 10 years. Anyways, that's my update for this week. Thanks for watching. Bye.